Welcome to the IADS Retail Park. I'm Maya, your host, and I'm here with Anchita to explore all things related to retail innovation. Before we begin, an important note: this podcast features AI cloned voices created with human oversight. All content is reviewed by experts for accuracy and relevance. Anchita, we've just released something that I think could be a real game changer for retail strategists worldwide: the IADS Global Retail Risk Index 2025. This is our first comprehensive framework for comparing risk across 8 global regions, and honestly, the timing couldn't be more critical.
You're spot on, Maya. When I look at what's happening right now, sudden tariffs reshaping profit margins overnight, geopolitical tensions disrupting supply chains, retailers need more than gut instinct to make expansion decisions. They need hard data, and that's what this index delivers.
Let's start with the big picture. We ranked 8 regions across 31 indicators, and some of the results might surprise people. North America came out on top as the lowest risk region, which might seem counterintuitive given all the political volatility we're seeing.
It's a great point. Despite Trump's tariff policies causing major retailers like Macy's, Nordstrom, and Dillard's to hike prices across categories, North America still has the strongest fundamentals. The developed economies, massive capital markets, and established infrastructure create a foundation that can absorb these shocks better than other regions.
What's interesting is that even with these challenges, North America's political hegemony and economic stability make it the safest bet for retail expansion. But let's talk about the second place finisher: East Asia and Pacific. This region really tells a story of resilience.
The recovery story in East Asia is remarkable. You've got this fascinating mix of developed economies like Japan, Singapore, and South Korea, alongside developing powerhouses like China and Thailand. What struck me most was how these countries have adapted to challenges. Take China. Despite struggling with weak domestic demand and deflationary pressures, the government's 300 billion yuan consumption stimulus is already showing results.
And then you have the individual country stories within that region. Japan saw record tourist arrivals, though the strengthening yen affected spending. Hong Kong is finally recovering after over a year of consecutive retail declines. These markets are proving they can bounce back from adversity.
Right. And you know what's really interesting is how Chinese tourists have become this crucial consumer group that neighboring countries are specifically targeting. Retailers in Hong Kong, South Korea, and Thailand are all competing for that spending power. It shows how interconnected these regional economies have become.
Now, Europe, our third place finisher, presents this interesting paradox of stable fundamentals battling political volatility. How do you read that dynamic?
Europe is probably the most cohesive region we analyzed, thanks to the Euro and EU membership requirements creating more uniform standards. The economic indicators are strong: good FDI flows, high female workforce participation, excellent logistics infrastructure. But then you have political instability driven by everything from US policy shifts to the war in Ukraine.
And we're seeing real world impacts. Primark is bracing for lower sales and potential tax hikes in France due to political turmoil. There's this constant tension between solid economic foundations and political uncertainty that defines the European retail landscape right now.
So, moving down the rankings, Latin America and the Caribbean landed right in the middle, which I think reflects the complexity of that region. You've got large economies like Brazil and Mexico alongside smaller developing countries, and the income inequality creates this fractured market dynamic.
That income inequality point is crucial for retailers. It polarizes consumer demand. Luxury and discount retailers thrive while the mid market gets squeezed. It's a completely different strategic challenge compared to more uniform markets.
And then we get to the higher risk regions, starting with South Asia. Despite challenges like insufficient FDI flows and infrastructure gaps, there's this incredible opportunity story, especially in India. Gallery Lafayette launching their first Indian store in New Delhi later this year is a perfect example of retailers willing to navigate complexity for growth potential.
The population density advantage in South Asia is huge for physical retail, especially when you combine it with high urban digital penetration. It's about finding the right strategy to tap into that massive consumer base while managing the geopolitical tensions and infrastructure challenges.
Eastern Europe and Central Asia rank sixth, and honestly, the Russia Ukraine crisis has completely reshaped this region's risk profile. Western sanctions, redirected trade flows, labor shortages, it's forced economies to adapt in ways we couldn't have predicted just a few years ago.
The Middle East and North Africa region really highlights how internal diversity can complicate regional analysis. You've got oil rich Gulf countries, where retail expansion is actively encouraged, contrasting sharply with Northern African countries facing significant economic and infrastructure challenges.
And then Sub Saharan Africa at the bottom of our risk rankings. But here's what's interesting: this might be where the biggest long term opportunities lie. The region has the highest renewable energy consumption and female workforce participation rates. With retail being such a feminized sector, that's a significant advantage.
The demographic story in sub Saharan Africa is compelling too. High dependency ratios due to large youth populations mean incoming workforce growth. The challenge is building the support infrastructure, FDI, market capitalization, supply chain connectivity to enable large scale retail expansion.
What I find most valuable about this index is how it cuts through the noise. We're living in an era where economic forecasts and judgments face increasing skepticism, but reliable data becomes the foundation for informed decision making. Cross disciplinary analysis combined with scenario planning tools helps retailers contextualize all this complexity.
And the timing is perfect. We're seeing retailers make critical positioning decisions right now. The stakes for strategic expansion have never been higher, whether it's navigating tariff pressures, currency volatility, or regulatory shifts. Having a standardized framework for comparing risks across regions gives decision makers the confidence to act.
Looking ahead, future editions of this index will enable multi year comparisons, which will be incredibly powerful for tracking how these regional risk profiles evolve. Retailers who leverage this kind of intelligence, combined with adaptive strategies and continuous risk assessment, are going to be best positioned for sustainable growth.
The key takeaway for our listeners is that in today's fractured global landscape, data driven decision making isn't just an advantage, it's essential for survival. The retailers who can transform uncertainty into strategic opportunity are the ones who'll define retail's next chapter.
Thanks for joining us on this journey through the IADS Retail Park. If you'd like to read the full exclusive, the link is available in the episode description. And don't forget to follow us on LinkedIn at International Association of Department Stores for daily retail insights, and subscribe to our Substack for weekly exclusives on all things retail. Until next time, stay ahead of the retail curve with us.
This is Maya and Anchita signing off.